Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 4th of May, 2016. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overall, the night session brought in more, or the overnight session or Globex session has brought in more selling as the market fears, has some growth concerns. As most of you have heard, Trump won Indiana, forcing Ted Cruz to step off, leaving Trump as the Republican Party nominee for the general election this November. The ECB stimulus is finally starting to show it's working. Market latest services PMI data showed sustained growth in Eurozone. April's final reading slipped to 53.1 on expectations it would inch up to 53.2. The dollar ticks off of 16-month lows. The dollar trades up 0.3% at 93 and a quarter. And then finally this morning we got the ADP employment change number, 156,000 versus 195,000 estimated. This is the lowest reading since April of 2013. Lowest reading since April of 2013. The ADP is a payroll processing company, a private company that corporations would hire to take care of employment, and it uses a service to determine, to give us an estimate of what the employment change is likely to be for this Friday, and it's coming in light. At 7:30 earlier today, about a half hour ago, we got the preliminary non-farm productivity, -1, slightly better than -1.3, and trade balance came in at -40.4 versus -41.2. The overall market sentiment overnight is for risk averse. Crude is strong, up 1.81% or 79 cents at 44.44. But the money's going into the U.S. Treasury bond again, and the notes, even the Euro bond is flat to slightly down. The Euro stocks leading the pack down with 32 points lower, or 1.09%, followed by the DAX, Nasdaq, S&P, Russell, and then the Dow. So overall, selling continues. Some interesting things to see overnight. On the overnight session, we'll cover those here in a second. But looking at what we should expect for today, just on the calendar, we're looking for the services PMI final, U.S. services PMI final, looking for the 52.1 to be the consensus. This is at 8:45 Central, 9:45 Eastern, 52.1. And then at 9 Central, we have a bunch of numbers, key being durable goods orders, expecting 0.8%. ISM non-manufacturing, 54.8. Factory orders, 0.6. And then for our energy traders, we have U.S. gasoline inventories, distillate and crude oil inventories at 9:30 Central, 10:30 Eastern. Oil inventories expected at plus 750. Priors 1.999 million. Distillates for this week expecting plus 400,000. Priors negative 1.695. And U.S. gasoline inventories negative 250,000 barrels. Prior was plus 1.608 million. As far as speakers are concerned, we're pretty clear there. We have Fed Speaker Kashkari at 5:30 Central, 10:30 Eastern, and we have Tesla earnings after the market close. So pretty busy. Let's start off, as always, by reviewing what we expected yesterday. Here's yesterday's Trader Bite hypothesis. Overall, the expectation on the open was for an open auction type open, an attempt higher, but overall the target is expected to be 51.25 below the resistance on this. In other words, the gate to shut off the buyers, given yesterday's context, would have been 65 and a quarter. That was the expected turnaround point if it does push up. The secondary hypothesis. The secondary hypothesis was for, again, open auction and then for it to drop. And if it does come back, the expectation is it would be stuck, as mentioned during yesterday's video. It would be stuck between 65 and a quarter and this 51 and a quarter area. So that's what was expected. Here's what we got. We got hypo 1 early on. We did not have enough to push higher. That would have been nice. It would have set up the sell-off a little bit better. But it attempted higher at 61.75, and then it went and pushed into this 51 and a quarter. It got its target on hypo 1. Once it got its target on hypo 1, it proceeded to do hypo 2 right after. Yesterday we had a neutral day. This is a normal neutral day, but it did end up, because you could see, swinging back and forth here between 51 and a quarter and 65 and a quarter. We didn't really get anywhere in the afternoon, except to give us a balanced profile on a neutral day. The market is indicating that there's really nothing new to price and nothing going on right now. Note that the delta over the last couple of days has been on the sell side. So as the market pushed up, for example, on Monday, we have this clear, can't draw a line. We have this clear push up on Monday. The delta drops pretty strong on the open on the first two bars. Drops pretty strong, but then hardly is able to breach the zero line on delta as the market pushed up. The market basically had a range of approximately 59.5 to 77.5, almost actually 18 points up, and the delta finished the day pretty much flat. So what that tells us is there's a lack of interest lifting the market or initiative buying from the bulls on this. Same thing here as we push lower. We could see the market the delta pushing down lower, but then as we start to go higher into the close, we do get a couple of strong bars, but overall it just isn't able to get, it closed right below the open here. Couldn't get back to neutral here or the 0 point. But on Monday, we finished the day higher above the open, but the delta is below the flat line, below the 0 line. Same with yesterday. The volume was pretty much in line. You could see that overall volume. We don't have any yellow line spikes. Volume was okay, but overall, it just seemed to drift. Now remember, Japan is closed through Friday on a holiday. Japan provides a lot of liquidity globally, but it's overall the market just doesn't seem to have any interest in exploring aggressively anywhere. The auction is still pretty methodical, as you can see here. Pushing the low side, testing the prior day's range, falling back out. A balanced profile, a pretty much a Gaussian profile, respecting our auction-based levels or volume-based levels pretty well. And overall, the auction is proceeding normally. But in the interim, it's clear that sellers are just not letting go since that huge setup we talked about on Monday morning in the 75 through 76 area, pushed to 77.50, and here we are approximately 30 points below. So we are back below the low of last week as we open here, but notice where the overnight low is. I talked yesterday about the high probability that at some point this week we would test this 40-50 level. This is a huge level. this is an MC point of control. It's a composite high volume node. This is an area that the market has liked and has liked a lot. There's liquidity. There's a liquidity level below it. For anyone who's traded the last time it was here, you probably noticed on your book map or whatever that there's just a ton of trading going off at 35. So this area, this 45 to 35 area is really key. And note that the overnight low stopped right at this MC point of control at 40.50 by a tick. So if we look at the overnight session, there we are. Impulsive, a very large impulsive move right off the European Open, and stops dead on its tracks, dead in its tracks at 2040.75, just a tick above our key level, and the market's just hanging out here. Market has built a B shape, a slight double distribution. I don't know if I'd count that. Not much happened in the Asian session. One big rotation down and then up, but the European session absolutely pushed this lower as it did the night before. So you can see back here, the European session dominated selling again on Tuesday night. So or Monday night. So this is important here. We have an impulsive move. The impulsive move is incomplete. So the normal pattern is for it to pull back and then chop and then continue lower and make a lower low. So I expect this overnight low to go, but we are opening out of range in a larger balance, and the inventories, you can see the price inventory is lower, so the inventory is short from a price perspective, but look at what's happened here with the delta. Again, contract inventory is flat, so that's a pretty odd thing to see. Whereas the other night, as the market sold off, you could see the inventory was clearly short, and then there was a small attempt to push up on the open, which failed yesterday and pushed us lower. But overall, the market's really aggressive on the sell sides. What that shows us. So on today's hypotheses, the primary trading idea for today is a likely open out of range down here. I'm looking for it to test lower, push this overnight low, make another attempt at a newer low, and then find buyers and start to work itself back up towards that 51 a quarter, the more recent point of control. Again, the 40.50 is also a point of control, but that point of control comes to us from way back in August after that big sell-off at the end of the summer. The more recent balance is up here at 51 and a quarter. So the expectation is it will likely push this low lower and then look to rise up. So that would be hypo 1. I'm out of time here. It's 8:15. And then hypo 2, I'm looking for responsive buying. I expect it to be quite labored, responsive buying into yesterday's range, responsive buying into yesterday's low, and then I expect it to find sellers and start to rotate lower. And our target now becomes the liquidity level at 35 even from where we are now. That's only about 8 or 9 points away. There's room to start moving even further down into the next key area, which is 2026. That breach is our next our monthly one-time framing low. If we breach this monthly one-time framing low here at 2026, we're likely to see a cascade of sellers again, as we did the other day when we broke this weekly one-time framing level. So some interesting things here that could develop, but overall the expectation is for an early tag down and an attempt higher, and then likely to be choppy into the afternoon. If not, then look for a test higher and then for the market to find sellers and for sellers to step in and aggressively push through the 40-50 and even lower. Those are the two key trading ideas for today. Hopefully you're able to follow along and learn something and be able to do your own analysis from this. If you have any questions, as always, tag me on Twitter. I try to answer the best as I can, or futurestrader71.com/contact. I'll catch you there. Take care.